Hey everyone, it's Matt. So Cathie Wood runs an investment firm called Ark Investments, and Ark Investments manages several exchange-traded funds, most of which have been able to generate over 100% return over the last 12 months. You'll find Cathie just about everywhere. She's on Yahoo Finance, Bloomberg, CNBC. She's everywhere. She's talking about her funds, the returns that have been realized, and she's also talking about the future. So in terms of what trades she's essentially making with the eye towards the future in terms of where she expects to see growth. All of this with, of course, the underlying pinning that the individual investor would find her investment thesis to be compelling and to essentially invest in the exchange-traded funds that Ark Investments has. So in this video, that's what I want to talk about is should an individual investor invest into Ark exchange-traded funds, or are we better off just investing into something like S&P 500, continuing down that path and realizing the returns which the S&P 500 has been able to provide over an extended period of time? Now, before I answer that specific question, it's important to also understand what is it that Ark Investments is primarily focused on. So Ark Investments is focused on disruption. So they're looking at disruptive technology. So when you think about disruption, you're thinking about artificial intelligence and robotics and clean energy, 5G. You're thinking about those types of things, okay? Human genomic areas or businesses that are very focused on those spaces. And if they are able to actually succeed, it would be disruptive to the individual sectors that they're effectively working in, thus realizing significant amount of return. Obviously, when you have something like that or some focus area like that, there is a significant amount of risk associated with it. So some of these can do very well, some of these can potentially do poorly. So anyway, so let's get into it. Let's start talking about each of these funds, and then we'll do an evaluation towards the tail end on whether it actually makes sense to invest into her ETFs or if we should just continue with the S&P 500. So this is really her website, okay? So there's really 5 exchange-traded funds that we will be primarily focused on. I'm not going to spend any time talking about these indexed innovation ETFs on a relative basis. These are pretty small potatoes anyway. So as you can see by the titles of a lot of these funds, okay, so innovation ETF or autonomous technology and robotics ETF, next gen, genomics, fintech, the various titles here is very reflective of the type of businesses that they are in and also the notion of disruption which our company is so focused on. What I'd quickly say is, based on some of the initial research that I've done, is it seems like ARK Innovation is kind of like the catch-all or the mothership, if you will. This has a lot of the strategies that is a part of each of these other ones. So for example, you will find autonomous vehicle type of companies within this fund. You will find genomic type of companies within this fund as well. So it's really an amalgamation, if you will, of a lot of these other exchange-traded funds. So let's open up the ARK Innovation ETF first, as this is, as I said, the mothership fund for all intents and purposes. So what you'll see here is a couple of things, okay? So this fund essentially was started in 2014. It's got, several $1 billion of assets under management. It's got a pretty high expense ratio, as you can see here. It's got a 0.75% expense ratio. Expense ratio is, of course, the cost associated with each fund, and this is the percentage that you'll be taking out of your investments. Much higher than the S&P 500 type of index, by the way, or an exchange-traded fund that would track the S&P 500. Scrolling further down, you can see that in order to purchase this particular fund, it'll cost you about $157 a share. And here is where you'll see some of the returns that have been realized over the last 6 months. Okay, so the last 6 months, she started off at about $86 a share, sitting right now at about $154. If I were to do a 1 year, you'll start seeing here, this is what the market dipped when the coronavirus thing effectively started, and at that point it was at around $39 a share. Now sitting at 154, as we talked about. Let's expand this a little bit further, right? Because it's said that the fund started in 2014. So you'll see here that from 2014 to really around early 2018, the fund was essentially doing a lot of nothing. 2018 it started getting some legs, started moving up a bit, 2019, but the real takeoff point really was after that March period post the pandemic, if you will, okay? And that is when it's got some exponential level of return here. If we were to scroll down a bit further, what you will see is the 1-year return has been about 153%, give or take. 5-year return has been around the 45-46% marker. Since inception, this thing has been generating about 36% return. Okay, so I think that's a pretty good spot to kind of pause, right? And let's look at the S&P 500, if you will, in terms of what type of returns has the S&P 500 been generating over the same period of time. So as I said, this fund has started in 2014. So if I go to the 5-year marker, if I go to max here, right? And back in 2014, so let's just pick a date, right? So let's just take March of 2014, April of 2014. This thing was trading at $188 a share, approximately, and it's currently at $392. Okay, so if I go here just to calculate the percentage change, put in 188, let's put in 392. So since inception, the S&P 500 has generated about 109% increase. Okay, so S&P 500 has got 109% increase since 2014. This thing has had a about a 36-37%, or the last 4 or 5 years over 45-46%. Okay, so not a good sign as it relates to this over the long term. Absolutely, it's been outperforming the S&P 500 over the short term, but long term it does not seem to have outdone the S&P 500 by any stretch of the imagination. So here, if I scroll down a bit further, we start looking at some of the investments that they're essentially holding. We're talking about Tesla, which everyone's aware of. Square, of course, that's pretty hot when it comes to even trading or exchanging Bitcoin. Zillow, CRISPR is probably the technology in the human genomic space. Spotify. So these are the top 10 investments that she's had. Obviously, Tesla's had a significant run-up of over 800%. We can quickly look up that. From a stock perspective, right? So Tesla, let's pull that one up. Okay, so Tesla has got $816 a share over the last year. Over the last year, this was basically trading at about $109. It's about $116 now, right? So from a change perspective, we are looking at almost 190% increase over the same period. So obviously you are better off buying Tesla stock, but it also seems like the return that she's realized on this particular innovation fund is primarily derived from Tesla and the significant amount of run-up that it has had. Let's see if there's anything else here of any level of importance. Probably not. So just at face value, what I would say is over the long term, of course, the S&P 500 has easily outdone this particular fund. And over the short term, of course, it's got some level of run-up, but most things, for all intents and purposes, post the start of the pandemic have had a significant run-up, okay? So that's this fund. And let's go to the next one, which is the Autonomous Technology and Robotics ETF. So this fund also has been going gangbusters over the last 6 months. Let's look at a year. Okay, similar trend line. Of course, not as pronounced as the Innovation Fund, but still pretty pronounced here. Let's go to all. Look at the full duration. Similar trend line as the other one. Did absolutely nothing in the beginning. Started getting some legs, and then of course right around the pandemic it started taking off like just about everything else. From a change perspective, this is of course not as performing as well as the Innovation Fund, definitely not as performing as well as the S&P 500. Better returns than the S&P 500, of course, over a 1-year period. And actually, now that I think about it, I don't think we did that analysis yet, did we? So let's punch in SPY again. Let's look at how they've been doing over a year. 1 year at the bottom, they were at 228 to 392. So 392. Oops, sorry. 228. 392. Doesn't matter too much. Let's see. 228. Because we're looking at the bottoms here, right? So this one is about 72% increase over the same period. All right. and this is 106. So this has definitely had a better short-term return compared to the S&P 500, but again, over the long term, it does not reflect to be the case. Okay, so the one other thing I wanted to check on is the type of funds that they own. So again, this one owns a lot of Tesla and a whole host of other stuff. I know semiconductors has had an issue with a supply-demand type of a problem. Looks like she's focused on the construction play. Yeah, so this one not as great as the innovation fund. Let's look at the next one, which is the next generation internet ETF. This one, it's focused on cloud computing, e-commerce, mobile technology, Internet of Things. There's probably some 5G somewhere in there. Again, similar trend line, right? So 1 year significant increase, all time did a lot of nothing, pandemic on, started running up. Better returns than the prior one, but not as good as the innovation one. Good run up in the last year. I'm sure it's primarily being driven by Tesla. And if we look at some of their funds, okay, so this is her significant investment in Bitcoin, because we know Grayscale had a significant position there. Square, Zillow, okay, so it's a lot of the stocks that you hear about in mainstream that she seems to be essentially chasing, but for all intents and purposes, we know that a lot of these stocks have done extremely well. I'm kind of curious what the ETF, the expense ratio is. Okay, so this one's a bit higher than the innovation. This is sitting at 0.79. That one was at 0.75%. So, okay, so that's a lot about this one. Seems to be similar case, pandemic play. Everything else is fairly status quo. Talking about disruption, but it seems like it's only disruption over the last 12 months. Let's take a quick look at Genomics. Genomics, CRISPR, a bunch of words that I don't really know what they mean. STEM, everyone knows about that. Taking, various cells from, I think even infants, and putting it into people. I think that's supposed to increase or improve the quality of life. So that's definitely a good thing. If I look at 1 year here, the trend line, again, it seems to be a pandemic run up. Everything else was status quo before that. 5 year run up, 1 year run up, not as good as the S&P, not as good as the S&P. Definitely 1 year run up way superior than the S&P. These are some of the stocks that they own. I know several folks are familiar with Vertex. Several folks are obviously familiar with Regeneron. So this is all that play. Roche, of course. So a lot of these funds, I know when we talk about the healthcare sector ETFs, this is essentially seems to be mimicking a lot of that one as well. Let's go to the next one real quick. Let's talk about Fintech. Fintech, similar type of expense ratio. Blockchain, of course, a significant focus area. Transaction innovation. So I'm expecting to see a bunch of like PayPal, perhaps, maybe some more Grayscale in this one. Let's take a look at that. Yep, PayPal. I don't see Grayscale, so I'm not sure how it's picking up on the crypto, but I know PayPal, you can buy and sell Bitcoin on that one, as Square as well, same thing. Similar funds like Zillow, I know it's in some of the other investments, all the other ETFs that she has as well. So it's got some similar parameters. Let's look up here a bit more. Let's see if this is just a pandemic run. Yeah, so this one actually started a bit earlier than the pandemic. Well, no, it's really a pandemic play. This one seems to have started a little bit later. I know the other ones were 2014. Okay, so this one's 2019, so that explains that piece of it. So it's a newer fund, so that's why the chart looks like it's been moving up a bit faster, but it really has not. And if I scroll down here, of course, nothing comparison to the S&P, but of course the 1 year numbers are better. So there you go. Okay, so this is kind of like what these funds are essentially, or how they're effectively performing. It seems like this one is by far the best performing one. It's probably the one in the media the most. The other ones here, they seem to be doing relatively okay, but they're pretty much all status quo. Like in terms of the increase, they're all about like the 105, 110% increase over the last year. Some of them are just a tad bit higher. But for all intents and purposes, they all seem to be having a run-up at the same time as essentially the pandemic has. Let's pause there, okay? So based on this research, right, which I kind of like walked you through in this video here, what I would say is these funds, for all intents and purposes, they seem to be very pandemic oriented, okay? So once the pandemic hit, March, ever since then, these funds have been kind of like skyrocketing. They seem to be focused on disruption, but I'm wondering if that's more of a buzzword, since disruption was obviously even in the water prior to the pandemic, right? Everyone's always been knowing or talking about disruption, but nothing essentially happened from 2014 when a lot of these funds were sort of created to about 2020, right? So it seems like this short-term spike has just sort of happened, but it doesn't seem to be all that compelling. It's just kind of like a buzzword play. And the other thing that it seems to be is got a significant run-up on certain sectors or certain stocks that we know are effectively doing well. So everyone knows that Bitcoin has had a nice run-up here, and whether it's Grayscale or PayPal or Square, they're all running in that same regard, right? So that seems to be the case here as well. We know that Tesla's got its monster run-up. It seemed to be a kind of like a key factor in a lot of these funds as well. We know there's been some significant investments in genomics. We know about CRISPR. So it seems like you can kind of create a lot of this independent of the fund and essentially having to pay a 75% or 0.75% expense ratio or 0.79% expense ratio. If we're looking at investing into this from a short-term perspective, my thought is to essentially caution around something like that, because I don't think this is essentially played out or had a long enough period of time to essentially prove itself as being something that is overtly compelling. Longer term, it has definitely not beaten the market. And I think that's an underlying premise when it relates to a lot of these funds, right? They all talk about how they've had these monster run-ups in the last year, but it's very, very difficult to beat something like the S&P 500. And I think I've illustrated in this video how the S&P 500 has had a better run-up than a lot of these exchange-traded funds that is essentially being traded by ARK Investments. And I think I can prove the same thing out by looking at some of the other exchange-traded funds that are out there as well. The punchline really is that it's very difficult to beat the S&P 500, and I believe I've illustrated that through this video as well. So anyway, so if you enjoyed the contents of this video, hit the like button, subscribe to the channel as well. If there's other investments or other funds that you want me to research into and do it online here, include that in the comments below, and I will see you soon.